Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Trident Limited, a very interesting textile limited share, and let's understand where it is headed and whether you should invest in the stock or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. So now about Trident. This was established in 1990 and they manufacture home textile yarns and paper chemical materials. So they have an arm into chemicals as well. It has a leadership in the home textile division where they manufacture a lot of quilts and blankets for retail players across the globe as well as India. They export to all over the globe actually, and they have customers in multiple industries. So not only do they have customers just for retailers, but in different industry also they supply their product too, and it is spread across India. If we look at the financials, the company's financials have not been that great. The sales have gone down by 4.5% on a year-on-year basis, and the profitability has the profitability has increased sharply to an extent, but about 20-25%. But the sales number is a lot to write home about. The debt has reduced. The market cap is around 4,000 crores. It has a very good dividend payout ratio, as with other textile firms as well. If we look at Nitin Spinner, Sarvan Limited, etc., they have very good dividend payout ratio as well. The return on equity is 12% and operating profit margin is 11%, and this is something that investors are worried about, because normally if you want to invest in a company for over 5 to 7 years, then you look at a very good ROE numbers or return ratios which should exceed 18-20%. There are many problems with the textile industry, and I had put a point on that probably 2 to 3 weeks back when I put up a video on the whole textile industry as a whole, because of the economic slowdown here in India. No matter how good the government is trying in order to put the economy into repair, the textile and auto industry is in jeopardy at the moment, and especially the textile industry is facing problems of erratic power supply, obsolete machinery, and high debt. The companies have gone into high debt because this is a very big capital intensive businesses. So they have put up the capital, they have put up all the machinery, plants and production units are there, but because of lower demand, and there is no demand, then the production is not that huge. So you have a very high level of fixed cost, yet the revenue is not coming in the coffers, and there lies the problem with the textile industry. There's very low capacity utilization. In some of the cases, in some of the companies, it is as low as 30 to 40%, and this is a very capital intensive business. The other problems that arise in this textile industry is shortage of raw material because of the a lot of trade and tariff barriers that have been put up globally as well as here in India to spur the Indian economy as a whole. There are many products or raw materials that these textile firms cannot harness from abroad. There is low productivity of labor because of the labor cost getting higher here in India compared to what it was 20 to 25 years back. There's competition from Bangladesh, especially Bangladesh in the Asian countries, because Bangladesh is now having a very big textile unit in itself, and getting projects from abroad is very easy there, and they are becoming a bigger market for people from abroad or companies from abroad to harness the products or the textile, you can say, material. There's high excise and import duties that have been levied on some of the raw materials for the textile firm that I've just mentioned, and the government is putting in a lot of money into the sick mills which are already on the verge of extinction. So rather than putting money in that field, what the government could do is help the companies which are in doldrums at the moment and are not able to pay back their debts, rather than looking at companies which are already sick and about to go into NCLRT as it is mentioned. So what needs to be done? Well, probably you need to wait for the turnaround. If the turnaround happens on the ground, then you go ahead and invest. Although the stock is doing pretty well and the stock has already moved up and it's around 8.5 rupees, very close to its 10 rupee, which is the 52-week high. But if you have it at the moment and there is a little bit of loss, then you can sell it at a loss of less than 20%. Otherwise, if you have it and you're in a little bit of profit, then you can trade your stop losses accordingly if you look at the technical chart and then exit, because I don't see a lot of money being made in this sector over the next year and a half. So be very cautious in such sector: infrastructure, capital goods, real estate or textile. And if you buy, and if you really want to buy into textile, then you have to wait for at least 8 to 10 years. Why I'm saying that, this could move next year, this could move 2 years down the line, but it may take 5, 7, 8 years for the stock to perform. And this is one of the better textile stock in the sector because of lower debt, rather than going into other textile companies. So this was my video on Trident Limited. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.